The Fed holds rates steady and indicates only one cut coming this year. We have a new summary of economic projections that you need to know. First up, Fed officials have, yes, raised their end of 2024 federal funds rate projection from 4.6% to 5.1%, only now pricing in one cut for 2024. But markets are taking this like that's not so bad, because if the Fed's only going to cut one time, then corporate earnings are going to come in good because you're going to have a soft landing or no landing at all, right? That's because the Fed kept their GDP estimate the same for 2024 at 2.1%. They also kept the unemployment rate projection the same at 4.0%, which is exactly where we are at right now. The Fed did raise their PCE inflation projection from 2.4% to 2.6% for this year, and their core PCE inflation target from 2.6% to 2.8% by the end of this year. So better economic activity, stable unemployment, higher inflation, less cuts from the Fed. That's what this dot plot is telling you. For 2025, the Fed is pricing in 4 rate cuts, with the federal funds rate ending the year about 4.1%. They did change their estimate and raised it from last summary of economic projections from 3.9% to 4.1%, so a slight increase there. They did also slightly raise their PCE estimates for next year from 2.2% on both the headline and the core to 2.3% for both of them. Their unemployment rate, they did send higher from 4.1% to a projected 4.2% in 2025, with GDP remaining around 2%. And the Fed did not change any of the numbers besides the unemployment rate for 2026. The unemployment rate projection went from 4.0% to 4.1%. GDP is expected to be 2% unchanged. PCE on the core and the headline unchanged at 2%. And the federal funds rate projection remains unchanged at 3.1%. It's actually interesting, though, because the Fed did change their longer run estimate for the federal funds rate. This is known as the neutral rate. In March, they estimated 2.6% was the longer run rate for the federal funds rate. And now it's at 2.8%, which is not a huge move higher, but it's starting to become impactful. In the last 6 months or so, the Fed has raised their neutral rate estimate from 2.5% to 2.8%. What I also like to look at is the range of Fed officials' dots, right? Specifically for the federal funds rate. You can see back in March, the most dovish Fed official had the lowest dot at 4.4% for the federal funds rate by the end of 2024. The highest dot was 5.4%, implying, you were looking at 3 rate cuts on the most dovish side and no rate cuts on the most hawkish side of the Fed. Well, now that went from 4.4% to 4.9%. So that the most dovish Fed official raised their dot by 50 basis points. That's kind of a big deal. Now, upon initial reactions, it looks unclear if the Fed what really factored in the CPI report with that dot plot, okay? Because when you look at the inflation report from this morning, it was fantastic. Core month over month came in at 0.2%. You were expecting 0.3%, so that was better than expected. Core year over year came in at 3.4%. You were expecting 3.5%, so that's fantastic. Headline inflation month over month came in at 0%. You were expecting 0.1%. And headline year over year came in at 3.3%. You were expecting 3.4%. So literally across the board, all of your inflation data came in better than expected, which is pretty rare for everything on the inflation report to come in better than expected. Now, what's actually fascinating with the Fed and what the markets are pricing in for Fed policy, even for July 31st, the markets are still saying there is a 10.3% chance that the Fed cuts rates, an 89.7% chance the Fed does nothing. For September, the markets are still pricing in that cut September. September has 57.9% odds of a cut, 6.2% odds of 2 cuts, and 35.9% chance of no cuts. For November, you're pricing in a pause or a 50% chance of a continued pause or perhaps the first rate cut. And then December, you're actually pricing in another rate cut, currently with odds of 42.7% and odds of only 1 cut by December at 30.8%. So markets are actually still pricing in 2 cuts this year. They looked at the dot plot today from the Fed and said, yeah, right, not gonna happen. We're still getting 2 rate cuts, which I find that interesting. You guys can see the markets are taking a leap off the top ropes here after Jerome Powell, and I gotta say, I'm a little concerned as well. Now, why am I concerned? Well, it's a problem. We didn't get anything from Powell today. He did not answer anything. He didn't tell us what an unexpected weakening could be in the labor market. He didn't tell us when they might be thinking about cutting rates. He didn't tell us what we would need to think about cutting rates as far as, inflation numbers. Would that be 2 more, 3 more inflation reports? He didn't answer a single question. Like literally did not answer a single question with clarity. He just punted and basically said, we're data dependent. Anything can happen. We'll respond to anything that does happen. And that's it. That is literally it. He just widened kind of the range of what they could do, right? The Fed, from that standpoint. It was interesting. Jerome Powell said that anytime there is major data on a day like today, like CPI on the same day as the Fed officials are allowed to go in and change their dots. And Jerome Powell said maybe some did, maybe some didn't. So the dot plot even today, from that perspective, probably is forecasting or pricing in or showing at least what different Fed officials are thinking now that this inflation report is out. But the thing I am really concerned about, if you guys want my honest opinion here and you don't want me to sugarcoat it for you, Jerome Powell and the Fed, they are absolutely waiting for a deterioration to cut rates. I don't think 3 or 4 or 5 inflation reports that show mild improvement will give the Fed confidence to cut rates. Honestly, I don't think that's what the Fed is looking for here. I think the Fed is still looking for what they were looking for in 2022, and that was real weakening in the economy and the labor market. So I am actually quite concerned that markets are way too rich right now, considering the Fed is actually waiting for some weakening in the labor market and or the economy, and I don't think stocks are priced for that. Now, does that mean you have to see some kind of epic collapse? No, that means I think we're just mispriced, and I think that's partly why you're getting this pretty dramatic sell down after Fed Jerome Powell stopped speaking today, is because I think the markets are coming to the realization that I am as well. You almost have to see a weakening in the economy or the labor market, or rates are not going to fall. And I guess it doesn't help that Fed Jerome Powell just did not answer anything clearly or logically, right? Like literally nothing at all. Never seen Fed Jerome Powell beat around the bush for so long on so many different questions. Like that's a skill that I don't have. I can't do that. Fed Jerome Powell did it today and made it look like art. Of the Fed projections, 4 out of 19 Fed officials saw no rate cuts in 2024, 7 saw 1 cut, and 8 saw 2 cuts. So it was right in the middle between 1 and 2, and that's why you've seen a mainly muted market reaction. The biggest reaction of all today was CPI data. But again, I think Powell just not answering any questions, which he technically did, but he didn't give you any new details or clarity or anything about anything, is kind of what could give the markets a little bit of a negative backdrop. Because I walk away from that like, yeah, the Fed's probably not going to cut rates in 2024 unless something does break, weaken in a dramatic way. Then it just doesn't look like the Fed's going to have the confidence to cut rates. They sounded like today's CPI was not going to do much. And even if you look at the actual dot plot itself, I mean, the dot plot itself is, look at this, PCE, right? So for the end of this year, the Fed's expecting 2.8% core PCE inflation. It's already lower than that, right? It's already lower than that right now, okay? So, like, even the Fed's not expecting inflation's gonna fall anymore throughout this year. Now, Jerome Powell kind of chalked it up to when you're looking at these month-over-month numbers and you add that into year-over-year numbers, then even good numbers for month-over-month don't necessarily translate into a year-over-year rate that's falling too much. And it just doesn't sound like the Fed is trying to cut rates this year. It sounds more like they're ready to cut rates in 2025 after the election. Jerome Powell did make a comment that basically said if we don't get that many cuts in 2024, we're probably going to get more of them in 2025. He was asked about the path of inflation and the dot plot for PCE. Steve Eisman, the individual from CNBC that always asks great questions on these Powell days, said that, like, your PCE target for the end of this year, we're already there right now. So what do you need to gain greater confidence to cut rates? And they basically said towards the end of the year, it'll, start to fall. PCE will start to fall more, and we may just get more progress in 2025 than 2024. And again, historically, the Fed does not cut rates during an election year. Very rarely does the Fed ever cut rates during an election year. So this could be one of those conferences that we look back at and say, the Fed kind of warned us that we're probably not going to get more than one cut, if at all we even get one cut. Now, again, that's just kind of the vibe I got from the Fed. That the Fed really just wants to see something weaken or something break just enough to justify cutting rates. That's what it sounds like to me. Although I think the Fed is facing a lot of political pressure on both sides for, a cut, no cut. I think there's a lot of political pressure out there regardless. And I could totally be wrong. I'm not necessarily making a projection for what the Fed will do. It just sounded like the Fed's in no rush at all to cut rates until something breaks. But let me know what you think down below in the comment section. Now, if you take a look at the NASDAQ has an RSI of 75.5. So you're already pretty overextended on the NASDAQ on a relative strength basis. Don't be surprised if we do see a little bit of a consolidation or down move coming tomorrow. A little bit of digestion from today's Jerome Powell. And after all, today was a pretty good day for the average stock. The average stock did exceptionally well. 7.55% of all stocks today broke above their 50-day moving average. You're now at 48.58% of stocks above their 50-day moving average. And I mean, that was a pretty big gap up. 8% of stocks breaking above their 50-day moving average in one day is pretty good, but still a lot of this move today is really just being dominated in your big tech names with stocks like Apple, stocks like Nvidia that are up about 4% today. We do have earnings coming out today from Broadcom. They are a high-flying, AI stock similar to Nvidia in that regard. I mean, the chart is basically straight up and to the right, following Nvidia. And the stock's up 2.5% today, heading into their earnings. If earnings are good, then that could continue to have a positive impact on your AI stocks like Nvidia. But if earnings are bad from Broadcom, that could really sour the mood in regards to AI. So that's definitely something to watch for here in after hours. Coming tomorrow, we will get PPI month over month and core PPI month over month. Core is expected at 0.3%. Last month was 0.5%. And headline PPI is expected at 0.2%. Last month was also 0.5%. So if that comes in line with what we're expecting, that could be a little bit more good news. But I really don't think we got much out of the Fed today. And I do think coming tomorrow, that probably sets us up for a little bit more downside, just given how overextended some areas of the markets are, like NASDAQ, like semiconductors. And I mean, the Fed doesn't sound confident in either, any direction, right? Economy is going to be weak or strong. Inflation's going to come in good or bad. There's just no clarity. There's no understanding at all about what's going on. And the Fed won't even outline like what we need to cut rates. I mean, that just leaves it up for markets interpretation, right? Do we need a weakening to cut rates? Do we just need, 2 more inflation reports to come in good? Do we need 3 or 4? There's just too much that we don't know, and I don't think we got a lot of certainty at all from the Fed today. If anything, I'm feeling a little bit more uncertain about what the Fed needs to cut rates. But that's just my opinion. So let me know down below in the comment section what you think about all of this information. I would love your take, because I don't really think there's a wrong take here following Jerome Powell today. You guys have a fantastic rest of your day, and I will see you in the next one.